What is it? What?
Hey,
Hey,
we're live.
I think we're live.
What is up, everybody? Welcome to another episode of the Bearded Men of Real Estate Show. I'm Ray. Say hi, Dan.
Hi, Ray.
Man, whoa.
I've been doing so good.
104 shows in, and you mess it up.
Well, yeah. If that were only the first time.
That's right. Well, thanks everybody for joining us. This is a Thursday.
Yeah,
It's like back in the old days.
that's when we started, wasn't it?
Yeah, like
I
you.
don't know why.
The Be More OGs remember the Thursday show starts, and we moved it. Well, I think there was a couple of other things that we liked to watch. And so we moved it in order to watch those other things. I don't even know if we still watch them anymore, but we didn't want to compete with them.
It was, oh, you know what it was? It was the Tim Macy show.
Was it the Tim Macy show?
But we've driven him out of business, so we're fine.
I don't think the shows exist anymore that we're on there. Shade already.
You know what? Yeah, this week's shade brought to you by. Actually, you know what? Let's do it right up front, Ray. They're brought to you by our new shirts.
Oh yeah. Oh, I don't even have that up or ready. But if you guys haven't seen, was it last week's show that we showed? I think we showed the shirts.
Yeah.
Last week we've already hit the minimum order, but we have shirts for sale that say, let me bring this up here. They say, listen, learn, and love. All right. Let me see if I can bring this up. Share screen. Bear with me here.
Yeah. If you can't tell, we're both in, different locations. There you go.
Listen, learn, love. They are here. So all the proceeds will be donated. It's a black on black shirt. And it's got a little bitty Be More logo on the back of it, just so people know where they could get the shirt if they want one. We've already hit the minimum order. So anything that we get above that is gravy. And so we can make the shirts. We've got a bunch of them already. So from several of you. So we really appreciate those who bought. Thank you so much. It doesn't support our show. This is just money that we're going to be able to give away. So
that's the entire reason we're doing this for.
And the whole listen, learn, love came about. I guess it was when the show started, 2.5-3 years ago.
Yeah.
We were just trying to find something that kind of defined who we were and what we wanted the show to be about, how we wanted to give back. And we thought that kind of defined it. We want you to listen to us, but more than that, we want you to listen to other people, learn from what you're hearing from us and from others. And then instead of just acting, just reach out in love. In love.
Just do everything from love, and the world will be a better place.
It's really all you need. All you
need is love. So there you go.
Excited, new shirts. Yep.
With lots of exclamation points for those.
Lots of exclamations. She exclaimed. Okay, so Dan, we got a bunch to cover today. We're going to talk about everything that's looming.
If you didn't see Ray's description on the show, a lot of things are looming.
It seemed like every article that had good news in it said, but is something looming? Is this going to happen? But is that going to happen? So that's where that comes from, is almost every headline that we had that was a good headline was followed by, but wait, there's a big problem, or something is looming, or what's going to happen? Which is, that's how they sell the news. But and I thought we'd use it to our advantage.
We got to do the gotcha headline thing too. It's the only way to get business nowadays. Just kidding. No, I shared if you're not a part of it, the Be More Contributors group with an exclamation point. So make sure to go join that.
Yes, for sure.
And then Melissa making a funny comment, and I'll explain why in a second. But I shared Mel is having a great day today on several levels. So
several levels.
But I shared one in the Be More Contributors group the other day, and it was just a headline. Interest rates are this. That was the entire headline. And I think in 3 years of doing the show, that's the first time we have ever seen a headline that just said, this is what's happening. That's it. Not funny. It didn't say interest rates go down again.
Yeah.
But what is looming?
Yes.
That was it.
The decline of interest rate has increased.
Yeah. Or our classic one, which is home gains fall.
Home price gains slow.
What?
I don't even know.
You're still gaining, just at a slower pace. That's still a great thing. But no, I did a post. I had someone who's now blocked me on Facebook because I kind of trolled her a little bit, but she commented on my post about, I think it was the one where we had 61 showings in 3 days and 17 offers or whatever. Yeah. But she commented and tagged herself in her own comment. And I always find that very interesting when it says Dan Ludwig is commenting. And I'm like, if you need anything in Southern California, call Dan Ludwig. Dan Ludwig will be there for all your needs. Dan Ludwig. Yes. So I called her out. So yeah, Mel is having a great, she's calling her. She's tagging herself in her own comment. I love it. I do.
Well, if you are watching the show live, we'd appreciate if you share it. This is not a regularly scheduled program, but one of the things that makes this time great is the feedback that we get from you guys and the interaction that we have about all these articles. So please share it if you are watching. We can't say share our post in the post because Facebook will like tamp it down. That's why I can tell you live, please share it.
Cooper Skelton.
Where do we go to get those shirts? All right, I'll post up a link here. And Dan, while I'm posting this link, can you tell everyone what Be More is actually all about?
Wait, hold on. Yes, I will in just 1 second. There's a bug on my camera and I'm waiting for it to walk across the screen. So if I seem distracted and I'm staring at something, it's because there's a tiny bug I'm waiting to walk across my camera any second now. By the way, before I get into what the show's about, Cooper, the $5 is in the mail. We paid him to say, where do I get the shirt? So, oh wait, I wasn't supposed to say that, was that right?
Cooper's a lender also, and we have an article coming up about the DTI going away and them using a funky method. So if you know anything about that, Cooper, you can just text me and we could talk about that.
Yeah, Cooper, stay on the show because when we get to that, we may even take it to the deep dive, or we may just dive it there. But it's really interesting, and as Ray said, very heady.
Yeah, we need a little help on that one.
Hey, so when Ray and I met it's more than 3 years ago at this point, but along to here on Facebook, here on the interwebs, I had an idea for a show because I am in fact a bearded man of real estate, and when I met Ray, I noticed something very interesting about him. He loves climbing palm trees. Did you guys know that?
It's my favorite.
Yeah, that's like if you want anything, know like little things about the show. Obviously, you got to watch. But yeah, he loves climbing palm trees. Loves.
I do it for the coconuts.
He is coconuts. But he actually had a layout for the show, so we combined our Wonder Beard powers into the same format you see today. But what I also noticed about him is that he loves giving value up front to his clients, just like I do. So the show is about being more as an agent, but also being more as a human.
There you go. And part of that being more is to do things like order one of those t-shirts. I just posted it in the comments for you. So if you are watching live, you can click on that. If you're watching after the fact, just kind of scroll through the comments. You should see it. So thanks for the shout out, Cooper, on that. Wait, what?
And if you just want to let us know what's going on here today, like Melly did.
Melissa Marr said I was attacked by greenheads this morning. F-bugs today. What's a greenhead?
Here, let me search real quick. Greenhead, New Jersey.
Greenhead.
So Jersey, we are powerless against greenheads.
So we call greenheads mallards. That's a duck. Because this is a duck capital of the world is in Arkansas. But I see it's a greenhead horsefly. Those are terrible.
Oh, are they big?
They are big. We have horseflies, but not greenheads. Interesting.
Okay, yeah, we call it same thing. The big flies, we call them horseflies.
It's just a horsefly.
It's a mean fly that bites the crap out of you.
Yeah. There you go. All right. So you ready to get into the headlines?
Yeah, sorry, my microphone's in my way.
Let's do it. There you go.
Oh, I even did like a refreshing thing at the end here.
I think I hit my mic there.
Hey, by the way,
they're big and they hurt.
That's what she said. We didn't try to match the shirts today, but we did.
We didn't try to match. It happened organically. I will say that we've had a request for some purple Be More shirts.
Oh, so yeah.
If you would like some purple Be More shirts, that may be the next order. But first, we need to solve these. Listen, learn, and love.
And by the way, if you're a fan of the show, your only job is to order one of those.
That's it.
Oh, and then also watch the show, comment, and be ready for whenever we're going to go live because it's always on Wednesdays at 10 a.m. my time, 1 p.m. on the Cheese Toast. So just be ready, guys, is what we're asking. We're asking quite a bit to listen to the show. Thank you.
That's right. Okay, so let's talk about home builders. The headline says, and this is where we get into the looming thing. Oh, wait, I just put you up big screen. Sorry. Well, that's the way to do it. I'm trying a different way to share this. I was using my iPad. That's kind of cool.
That's cool looking. I can't read it, but that's kind of cool looking.
Yeah. So I can share. It's a shared screen there.
Nice.
Okay. So the headline is that home builders see the strongest May sales in over a decade, but they have a big problem.
Come on, man. That's a great thing. But, well, I already know what the big problem is going to be. They're not building enough homes, right?
Yeah, pretty much. So in short, new home sales are up 13% annually, according to the U.S. Census. A huge stat point to point out is that the sales of imaginary homes, also known as the sales that don't exist yet, also known as pre-sold homes, are up 15% compared with a year ago. So this is a quote from Robert Dietz. He's the chief economist at the National Association of Home Builders. He said that sales of homes not yet under construction are rising, given capacity limitations but by the builder industry. Due to labor and land constraints, home builders are already producing too few single-family homes given the potential demand. As housing demand has picked up in recent weeks, builders have shifted sales to homes that are not yet under construction. There was a 20% year-over-year gain for such sales. That's all a quote by Robert Dietz. Interestingly, though, single-family starts, if you remember at the very beginning of the year or end of 2019, before the COVID, Corona, everything like that happened, housing starts were up 13%, and then they tanked drastically. Well, now sales of new homes are up, but housing starts are still down 18%. So it's 18% lower compared with a year ago. Okay. So the big issue is skilled labor. The industry has added over 200,000 in construction jobs, but builders still cannot keep up with the demand. This is a quote from Matthew Speakman. He's an economist with Zillow. He said the rapid improvement in sales of new homes may also reflect a change in consumer preferences, with buyers showing newfound penchant for cleaner, never lived in homes. Dan, are you seeing that too, where people are kind of wanting the cleaner, never lived in home? Are they?
That is a thing, definitely. That is a sentiment that is growing amongst my buyers. And I've been showing a lot more. Usually I don't show a lot of new construction, but I've been showing a lot more of it lately. And they are to kind of go ahead.
Is it because of Corona and COVID, or is it just a change in their preference that they just want something clean and new?
I mean, I'm not asking specifically, but it's just a coincidence that since the Rona is happening, I'm getting more new construction buyers, or are at least open to looking at it. Usually it's just, we want to buy a house. They don't even bring up new construction. Or if they do, they're like, I was thinking about that. But remember, new construction means high taxes. Like there's one that I showed, the taxes are over 2% total. Like that's a lot here in Southern California. So anyway, but to go along with the article,
tons. It's echoing it with her. So
yeah, with new construction that we've been looking at, I mean, they're 6 to 8 months out. So that's the 4, 5, 6 different developments. Now there's the random ones that have fallen out of escrow. The buyer couldn't perform that you can jump into, but for the most part, they are. I think it usually is 3 to 5 months, but it's a little longer than that right now. And I think it's because of everything that's going on and labor shortage and labor costs and all this stuff. Sorry, Sean Stiles, what do you got?
Sean Stiles, he said, would be interesting to note if there is a generational relation to the amount of interest in new construction. So I guess he's talking about a lot of the millennials and younger home buyers that are buying are more interested in the new construction than they are the resale homes.
Yeah. And there's also,
he said taxes can be close to 3% here in Beaumont.
Yeah.
Wow.
Yeah. So, and Beaumont is one of the gnarliest cities that we work. Obviously Beaumont is Southern California, by the way.
SoCal.
Yeah. And he's, so they have crazy Melrose and crazy special assessments. And Beaumont has actually gotten in trouble for it. Like community leaders and politicians have gotten in trouble for it because they're so high, which whatever. It's one thing if they're being used properly and going back to build the things in the community that it needs, but they were being misused and people have gone to jail for it there, specifically for that city of Beaumont. But yeah, so I don't know. It might be a little bit of that where, you know, it's a generational thing and they just want new construction. It might be partially because, and we're going to cover it in an article coming up here, that the, you know, people wanted to go out to the burbs and get away from more congested metropolitan areas. So it may be partial to a couple things, but new builders. Sean, what are you seeing? I think Sean shows more new construction than I do.
He said till 2032.
That's the taxes that he's talking about.
Yeah. Melissa Marr said, I don't even want to talk about taxes. It hurts me. Yeah, Jersey taxes are pretty bad too. So I still want, on this topic, kind of off this topic, I still want to create a bar in Southern California called Mellow Ruse.
Mm-hmm.
It'd just be a really chill bar.
And call it the Mellow, M-E-L-L-O,
the
R-O-O-S, the Mellow Ruse.
The Mellow Ruse.
People are like, that's such a cool name. What does that mean? You don't want to know.
You don't want to know.
You don't want to talk about it.
All right. Speaking of cooling off, what's this stuff? What's going on in the housing market? So what was funny about this article to me is if you look up this article on CNBC, there's two different headlines. I'm actually going to do this live for you.
Okay.
All right. So if you go to CNBC.com, and then you go to, it's the same exact content, and they have two different headlines for it. One's a video, one's the written article. Okay, here it is. Let me post this in the share and then share it with you. All right. You ready?
Yeah.
Here it is. It says real estate. Housing market should cool off later in the year. Moody's economist Zandi says. Power lunch. We will get stronger. Existing home sales moving forward, said Moody's Mark Zandi. What? It's literally the same day, same base article. And what they do is they produce a video and then they also produce like a blog post or article, which is a great tip for other real estate agents that are out there that are using video content. You should do this, right? You should produce a blog article, and then you should nest it. So if you look at this article,
that's crazy.
Here is, we will get stronger, existing home sales moving forward, and then housing market should cool off later in the year. Okay. So Dan, decode this for me. What's going on?
All right. So the housing sector has been one of the most resilient areas of the economy during the Rona downturn, but a chief economist, and that's who we're talking about there, the Zandi, at Moody's Analytics said Tuesday that he expects the growth to moderate later in the year. Just think of that tiny little sentence right there, the growth to moderate.
Right.
So the growth is still going to happen. It's just going to moderate. So he's saying both things in one sentence. He's not saying there'll be a crash. He kind of goes into that. But sales of new homes last month, which we spoke about just in the last article, they rose nearly 13% year over year, according to the Census Bureau. But they are predicting that the sector will weaken as some of the government aid and regulations used to prop up the economy expire. Okay, so now here's a quote from the man himself, Mark Zandi. Let's see. The confluence of high unemployment and the end of the forbearance measures means that we'll get more defaults and ultimately more foreclosures, more foreclosure sales. By the way, I had to say that over and over again before the show went on because I couldn't say it. It's hard to say ultimately more foreclosures and more foreclosure sales for me anyway. And that'll put some weakness into the housing market. Okay. Millions of homeowners have taken advantage of forbearance programs that allow borrowers to miss mortgage payments, helping to insulate. And I thought that was an interesting word right there, helping to insulate the housing market from a historic rise in unemployment. But here's what I have to ask. So how many of those were accidental forbearances, which we've talked about on the show? You had one, Hudson a couple of weeks ago had one.
Yeah.
And how many are actually needed? Okay. And then and I asked the question. So I'm posing a question back to you. What does this cooling off mean? And if you want to go back to it, Ray, right there, growth to moderate. Okay.
Yeah.
So it's crystal ball stuff, but he mentions it there. And it's if these forbearance plans don't pan out, if you cannot refi, if you did unfortunately lose your job and you can't get a forbearance and you don't get another job in 6 months or whatever it is in time to pay back the forbearance, then your house goes through the foreclosure process. Right. But is it going to be enough to cool off? And I'll say it exactly how it is. Is it enough to cool off the market, or is it going to dip by 3 to 5% like we've been saying on the show? Which, by the way, 3 to 5% is big. 5%, is $25,000, on a $500,000 home.
This is the part that doesn't make sense to me. For years, we have had a problem with inventory. So now they're saying that there could be a lot more inventory hitting the market due to foreclosures. And they're saying that because of that and the foreclosures, bank will have to increase their price to make up for it. So we might see an increase in rates, but we're going to also see an increase in inventory that has been needed for a long time. And it's not going to be inventory at the top. It's going to be inventory towards the bottom 2/3 of the market, which is where everything's been short.
Right.
So I think by increasing the inventory, it's going to create a lot better situation for most home buyers that could deal with the extra 0.5% in interest rate.
Yes. And it'll help the housing market settle and not crash.
Yeah.
Because
it crashed due to affordability. It would settle and become more of a balanced market,
which is always a good thing.
Yeah.
So is that what he's talking about? The cooling off? Because right now things are crazy hot, which we're going to get more into the show, and we can talk about personal experiences as well, but personal experiences in our business. So business experiences, I don't know. But anything less than the madness that's going right now is technically a cooling off, in my opinion. I haven't had a day off in a month. So, it's crazy hot right now. Anything to me is a cooling off, So there you go.
Ryan Boker says, I would be shadow inventory. I guess he's saying it would be shadow inventory.
It would be, yeah.
Those people that are foreclosed on will still need somewhere to live. Yeah, but if they're foreclosed on, I guess it's rentals, right? So now you have more people entering the rental market, so it's a better place for an investor. So if an investor buys a foreclosed home, now suddenly they have an automatic renter.
Yeah. Because I do think these unemployment stats are temporary. I'm not an economist, but I think a lot of them are, furloughed, or they did get laid off, but they're still very, very skilled in their field, and they're going to go get back. Once the economy comes back, they're going to go get a job somewhere else, but they're going to have a gap in their employment.
A lot of strong companies have survived. Sean Stiles says, maybe, but Fannie and Freddie are providing deferral to the end of the loan for all the forbearance they can cover. An option borrowers can start taking advantage of July 1st. And a lot of the mortgages are backed by Fannie and Freddie. So
a lot.
Yeah.
I forget what it was, but we covered the story when this was the forbearance was the first thing. We always cover everything first here on the Bearded Men Real Estate Show. I don't know if you
we do.
Get your news anywhere else. I don't know why you would get your news anywhere else, but we always cover it here first. So if you hear it somewhere else, know that we already covered it here first.
Yeah, back when the freak out was, hey, if you're putting your loan in forbearance, you have to pay that back, right? We were already on the flip side saying, yes, you have to pay it back, but you could also possibly add it on to the back of your loan.
It's also not one
already gone through. Right.
And then what happened? You could add it on to the back of your loan. So we actually predicted the future as well.
Predicted the future, yeah. Ryan Bokro says, yes. So we have to rely on investors a lot, which would put a damper on the market temporarily. I don't know that would put a damper on the market. I guess investors will be competition for buyers who have not been able to find a house or afford a home. So it would not essentially ease prices in this scenario if the investors have money to do it. He said, I foresee GSMs stepping in and offering long-term solutions to prevent foreclosures. Melissa Marr said, be more ahead of the curve. Yeah,
it's true.
Okay, speaking of mortgage demand, let's talk about this next article. Weekly homebuyer mortgage demand ticks down, but is still remarkably 18% higher than a year ago. I love headlines.
It's looming, Ray. It's looming.
Yeah. So
can things loom up?
Well, what is looming? a benefit to everyone. Okay, mortgage demand is down 8.7%, but purchase volume is up 18% over the last year. One factor that may potentially crimp growth in the months ahead is the release of pent-up demand from earlier this spring, clashing with the tight supply of new and existing homes on the market, said Joel Kahn, MBA economist. That's the Mortgage Bankers Association. He said additional housing inventory is needed to give buyers more options and keep home prices from rising too fast. So he is back on the hey, we need inventory train. This is, I guess you could show this chart, the mortgage purchase application chart, and then you see the 30-year fixed mortgage. It's way down. So also wanted to get to the breakdown here. Let's see, applications to refinance a home fell 12%, but were 76% higher than the same week in 2019. And those applications to refi are still 61.3% of total applications. So it's still way high.
It's still way high. And this is what after a time where interest rates have been low for a very long time, and a lot of people have already refied.
Yep.
And there's still a lot of applications to refi. So
this is a good point from Melissa Mara, which that's, I mean, it's so rare. No, I'm kidding.
More shade.
She said, my investor is crying now. He can't get a quote deal. There's too many people. There's too many people from out of the area wanting to move to the beach and are willing to do the work. So I guess to put in the work to flip and reno a property for themselves, which actually we just had somebody here locally do that. They went and bought a condo and flipped it in Destin, and now they're using it for Airbnb and for themselves. Sean Stiles said, I hear you on that, Melissa. So I guess he's experiencing some of that too. It is really, I mean, I feel like in 2013, 14, 15, investors were doing pretty well. And then everyone who was an owner occupant wanted to be the next Chip and Joanna Gaines.
Right. A lot of that.
They started buying properties that normally a owner occupant would not buy because it required too much work. But people were seeing the opportunity to put the work in and get the money out in 2 years in a way like they never had before. And so now owner occupants became competition for an investor, and they were willing to buy at a higher rate because the appreciation would make up for what they're not getting in the immediate flip gain. So that was the first entrance of major competition for investors. Then the market kind of stabilized a little bit. They were getting pretty good deals. And then the shortage of inventory that happened around 2016 or maybe late 2015 for some markets. In our market, it was late 2016. And they haven't been able to get a great deal since. Used to, all my investors were contacting me looking for, I want to buy this property and flip it and then get a 30% return after repair.
Yeah.
We used to do that a lot. But now everyone that's coming to me with those numbers, I'm like, okay, what investor seminar did you go to from 5 years ago? Because that's normally what they're doing. They're going to these seminars, and the seminars haven't been updated with current metrics.
Right.
So now, I mean, if you can get a 20 to 10% return, you're doing pretty well. But given all the competition that's currently now, unless you're willing to buy that one house that is like really bad off, there's a lot of competition for regular homes.
You can get it for 150 grand in a $600,000 neighborhood, but you got to put 400 grand into it.
Yeah. Well, in our area, maybe a $250,000 neighborhood and picking it up for 40.
Right.
We did that. And now we're going to be selling it around 285. It should sell pretty quickly.
Nice.
So that it's still possible, but the amount of money that went into it, he's still like, for me to make my money, I got to sell it at this price. I'm not going to lower my price.
Well, and how long did that take to reno? That probably took longer if it needed more work, right?
It took a lot longer than expected, in part due to COVID and all that stuff. So what was going to be a 3-month turn is now a 6-month turn.
Yeah. I have
holding cost for the money is higher too.
I have friends that have built a flip business on the live in and flip and sell in 8 months to a year, whatever.
Yep.
And now they're just straight up flipping homes, but they started when the margins were much different. You could buy, and also where they're doing it is a very high end neighborhood. So you could buy back then, you could buy something for 700 grand and then sell it for $1 million. Now the margin,
Go ahead.
Now the margins are a lot closer. You could even buy, I think when they started, it was more like 500 or 550 and then sell it for 850. Now the cheapest thing in there is 900 grand. And if you don't do the work right, you're not going to get 1.2 million. You're not going to make your money back. So but they've always done it specifically for these guys. They've done it the right way, but they've built, an actual flip business based on live and flip.
I'm trying to move a lot of my investors. This is a little bit off the topic, but hey, to whoever's watching and to agents that are watching, maybe this will help. But I'm trying to move some of my investors to multifamily flips. Absolutely. Because there's far less competition from the owner occupant tip and JoJo. And the only other competition that you have are investors, and most right now are not willing to take on the work. So if you're willing to put in the work, then potentially you could purchase it. The only issue is that the owner of that property is also an investor.
Right.
And so they're also
that's what I was going to say
on their side. Right. Yeah. So they're not going to give it away. They want to make a little bit of money on it, but you got to take it off their hands and take the trouble of doing all the work. And then potentially you can find a pretty good deal. So owner occupant flips. And also you could do an FHA loan if you live in one side and do an owner occupant.
Right.
Up to a quadplex, I think.
And I think another positive spin for your potential purchasers when you're all done with it is a regular average Joe can become an investor. They buy the house, and then the back house is already built out, and that's what you rent out. Now you've become a landlord and you own the property.
Right.
So it's kind of
or
a
the
win-win.
duplex or the other 3 units that is attached, or yeah.
Interesting take here. You're always learning something here on the Bearded Men Real Estate Show.
Hopefully you listen, you learn, and you love.
Hopefully. All right. You want to go to the no-duh files, Ray?
Yeah, let's do it.
All right. So this is from the no-duh files. Remote online notarizations surge. I'm just kidding. Surge 40% during the Rona. Like, I think we've talked about that. We knew that was going to happen, right?
Yeah.
And how we've talked about it is this has been like a thing that's needed to happen for a long time. And now this is forcing online notarizations, forcing the hand to make this happen. So since stay-at-home orders and self-quarantines began in March, more businesses have moved to digital solutions, and that's been particularly true for parts of the real estate transaction. A survey from, and I don't know how to say this business, if it's Qualia, Qualia, if it's Qualia.
I think so.
Right? Like Qualia.
Yeah,
that's how,
Qualia.
Yeah. It's kind of a fun name, or Qualia, but I think it's Qualia. A survey from Qualia revealed that there was nearly a 40% surge in remote online notarizations from April through May. 70% of those who responded to the survey said they anticipated either having the same volume or an increased volume over the next 30 days compared to the previous month. According to Qualia, 33% of respondents said they used remote online notarizations in the month of May, which is up from 24% the month prior. This is a quote from Nate Baker. Nate Baker is his name. He's the CEO of Qualia. Bait Naker's a good. I'm writing a lot of short stories right now. I'm going to call one of my characters Bait Naker. These results suggest. I can go so many ways with that name. These results suggest that real estate professionals are settling into new routines for conducting business, whether they're contactless, in-person, digital, or hybrid options. He continues, notably, a large majority of respondents remain interested in remote online notarization options. So, as we've been saying, Ray, is this just forcing the hand? Is this just a thing that was already inevitable, but now it's being made to happen because of the Rona?
Sean Stiles with a hot take, aka convenience in completing contracts increases 40%.
That's a hot take. I love that.
That's good. Alternate headline. I like that one. So, and I like that headline better because it's true. And also Arkansas is finally on board with all that kind of stuff, which we've been waiting for a long time.
I do. So the only thing that we have, and we can now do it, distantly notarized, but everything is online. I haven't had anyone physically sign anything in forever. Now, when they actually do sign it, when we're sitting at the appointment getting the listing, they're signing. Mm-hmm. But there's even times where it's like, cool, we're ready. Boom, here's your listing agreement. Sign it. But
we are finally there, but we're still having to pull up for the title and all that kind of stuff and in hand sign. But there is some digital notarization that are happening, which makes it a little bit easier. All right, so let's talk about this very complicated article. This is the duh file because I feel duh. I don't get it. And
well, do you want to?
Oh, we can just cover it. I'm not going to spend a lot of time on it because I don't understand all the ins and outs. But I will tell you that we're going to have a lender on the program soon, who hopefully will be able to explain this a little bit better. We talked about it earlier in the year when it was signaled that this would happen. The Consumer Financial Protection Bureau is dropping the debt to income ratio requirement for loans.
No, wait, does
we understand that part, right? We understand debt to income ratios, right? So if you have, well, it's how much debt you could take on given the income that you have, right? And for a long time, there have been mathematical formulas that banks have used to do that. Well, this article is on Housing Wire. This would be the part of the show that we would love for you to tag a lender and to give us a little bit more information. But back in January, I'm just going to kind of read from this article. Back in January, CFP Director Kathy Kranger sent a letter to several prominent members of Congress, and Be More covered it, saying that the Bureau has decided to propose an amendment to the QM rule that would move away from DTI as a factor in mortgage underwriting. Now, the QM rule came about, I believe, due to the crash. And one of the things they looked at, they were trying to tighten lending constraints so that the subprime mortgages and the whole crash, that kind of stuff that happened, wouldn't happen again. So they put in a rule looking at debt to income. Well, ever since they put in that rule, lenders have been trying to stretch that rule in other ways, and Fannie and Freddie Mac are not even bound to the requirement. So they have a condition known as under the QM patch, loans sold to Fannie or Freddie Mac are allowed to exceed the 43% DTI ratio. So
okay.
What they're looking at, it says, now they're following through with that plan. In the first notice of proposed rulemaking, the Bureau wants to amend the qualified mortgage definition in Regulation Z to replace the DTI limit with a price-based approach, saying it preliminarily concludes that the loan's price, as measured by comparing to a loan's annual percentage rate to the average prime offer rate for a comparable transaction, is more holistic and flexible measure of a consumer's ability to repay than DTI alone.
Okay, but wait, let's just
let me read it. Let me read it one more time.
Yeah.
A loan's price, as measured by comparing the loan's APR to the average prime offer rate for a comparable transaction, is more holistic and flexible measure of a consumer's ability to repay than DTI alone.
Okay, but it's not
so obviously.
What about, so that sentence that Ray just read 2 times, what does that have to do with the actual borrower though?
Right.
It's talking about possible this compared to that may change at any minute is a good thing for this person. But that person, I've always said it literally since pretty much day one as a real estate agent, as far as DTI goes, because people, they don't know it. Even if you say debt to income, they're like, what does that mean? Basically, it means that if I make $1 million a month, that's really awesome, isn't it? But if I'm paying out $2 million a month, there's nothing we can do. You're paying out more than you bring in. So there's no way I can add another payment to that threshold, right? That's what I've always explained it. So to me, it's always been a very good indicator when they run it. And when your DTI, your debt to income ratios are very close, it gives you an exact measure on pay this car loan off, pay down that credit card, improve that score. It helps. I think it's a great measure of it. For it to go away and throw it into some weird equation that no one understands, I think it's loosening things up too much, and it has nothing to do with that actual borrower's risk to take on a loan. Does that make sense?
Yeah.
I just sounded really smart, by the way. I'm sorry. I didn't not do that.
I want to read another quote. The GSE's patch expiration will facilitate a more transparent, level playing field that ultimately benefits consumers through promoting more vigorous competition in mortgage markets. Interesting.
Okay.
The Bureau is proposing to replace the patch with a price-based approach to QM loans to preserve consumer access to mortgage loans while making sure consumers have the ability to repay them. The Bureau is committed to ensuring a smooth and orderly mortgage market throughout its consideration of these issues and any resulting transition away from the GSE patch.
Okay, and I get all that. So that part right there, making sure. No. Sorry, I'm reading off the screen as Ray has it up. Also making sure consumers have the ability. Wait, go back. Proposing to replace the patch with a price-based approach to QM loans to preserve consumer access. That part right there, I get that. That all makes sense.
Okay.
But then if you remove the DTI, that's part of their qualifiable traits in purchasing a home, right?
Right.
If that's gone,
says, danger, Will Robinson.
Right.
Melissa Marr said, you are really smart, Dan.
I know that's how I heard it, by the way, Ray. You are really smart, Dan.
I emphasized it, like she said. All right, so let me make this a lot easier for all the realtors and tell you how you should feel. America's realtors applaud the CFPB's action to provide a temporary QM patch extension and commend the Bureau and Director Cringer for acting on behalf of our nation's consumers and home buyers at a time when market stability is so critical. National Association of Realtors President Vince Malta said. Perhaps most importantly, we appreciate the Bureau's decision to eliminate a hard DTI standard, and we look forward to more closely examining the proposed replacements and their impact on home buyers over the coming months. So in other words, let me paraphrase. Now, I don't want to get in trouble with Vince because I don't know him personally.
He's getting a kickback.
Like he said, we're for you getting rid of the DTI, but we have no idea what this other thing is. I think he said basically exactly what we said.
Yeah.
We have no idea how this other thing's going to work. And
no, this makes sense. But I don't understand what you're doing.
Yeah, but he says as realtors, we should applaud this action because the DTI was a difficult standard. Now, he also says that it's going to increase market stability.
No.
I don't know how in a market where you're short on inventory and there are too many buyers, giving more buyers the ability to purchase, how is that going to help?
More ability to purchase that may not be able to purchase.
Yeah, let's enter more buyers into the competition realm so prices continue to escalate for sellers. Is this really a catapult, a vault? Let's sip that tea. Sip it. Sip it. Is this really some kind of catapult or vault for property owners in which the buyers are going to pay the penalty over time?
And especially in markets,
a great comment. Glad someone told me how I should feel. I didn't know what to think.
Yeah,
you're welcome. If you ever wonder where you should stand, you just look at your National Association of Realtors, and they will tell you what we think.
By the way, a lot of realtors go by that. They would read that article and go,
"Oh, totally. Oh, okay. Oh, I see that this is a good thing for us."
I see that. Yeah, Vince Malta said that.
So I think. In my opinion, the National Association of Realtors at times is fairly short-sighted and transactional versus long-term health. And when you look at the long-term health, having a solid DTI ratio seems smart. So I'm not sure for long-term health that this is a good decision. In my opinion, a better decision would be offering more loans to people who are or loosening constraints on people who are entrepreneurs or who are self-employed or who have a ton of write-offs in their business, and then they add those back because the business is buying their truck, the business is doing that, so there's no personal installments, and so they can't get a loan for like 5 years or 2 years or whatever.
Right.
So that seems like it would open up a potential buyer with a solid income track and a solid way of making money. Versus doing away with the DTI, which seems a lot like subprime era policy. Ryan Boker says DTI is not going away. It's just that the hardline standard is not going to be a disqualifying or qualifying factor.
That seems like you said it's going away.
He's the excellent double talk.
He's so good.
You're so political, Ryan.
It's not going away. It's just that it's going to go away.
It's not using it.
So here, let me say it how Ryan said. It's not going away. We're just going to repackage it.
We're going to pivot.
It's a rebranding. But if you go back, so it's funny. Can you bring up the article one more time? I don't know.
I think what he's saying that they're still going to look at the DTI, but it's not a disqualifying or qualifying factor. But
right.
I guess they're trying to look at an entire picture using the DTI as only a small part of that picture. But if they're not using the DTI as a single qualifying or disqualifying factor, how does it factor in to what they're proposing, which is a price-based approach measuring a loan's annual percentage rate to the average prime offer rate for a comparable transaction?
Okay, but what is that comparable transaction, and how do I quantify that to get pre-approved? Does that make sense?
Yeah, and that's what the consumers all understand, Dan.
Right.
Yeah.
That's that. How am I going to explain that? Well, no, you don't have DTI anymore. I mean, it didn't go away. It's just been rebranded. But what they're going to do is they're going to take the average, and I even brought this up to a lender literally seconds before we went live, and he went, "Wait, what? Why would they do that?" And this is a dude that's been doing this 20 years and does a very, very high volume of business with all levels of buyers.
He does like 3. No, I'm kidding.
A year, yeah.
Shade.
Yeah. I think he's actually on about 3 a day, by the way.
Nice.
Yeah. So he's high end, and he's I tried to get him on the show, but literally gave him 3 minutes. Hey, you ready? And he's like, "What? No, I got an appointment at 10, bro." Okay, but let's say it doesn't go away. It's just like Ryan says, it's a less qualifying or whatever qualifying factor. Isn't that going to give lenders the right or the ability to just kind of look past that thing? Well, no, his debt to income ratios are off a little bit, but I use this qualifying quantitative conundrum of a formula that Vince Malta sent me, and everything's fine. But I wanted to go back. And I want you to come back to Ryan's LOL comment, but it does seem like this article is telling you what is good about this. Not here's what we're proposing. It's saying here's what's good about it. Here's what we're doing. Here's why you should feel good. And then it ends up with realtors are applauding. It seems like it's written heavily in favor of this already happening when it hasn't happened yet. Right.
Right.
I mean,
realtors support it, and we look forward. The exact quote paraphrased, which is how people do it. The exact quote paraphrased was, "Realtors support it, and we look forward to learning more about the new proposed measures because we don't know it."
What's proposed, right?
Right. Ryan Boger says, "LOL. It'll still be part of the underwriting as part of the bigger picture, taking in future potential. Honestly, it could make it harder, not easier, because if inflation occurs, prime rate, will the borrower still be able to afford the home? Current DTI doesn't take that into account."
Right, but go back to the article. It literally said replace.
Let's see. Yeah, it does say replace it. Uh-oh, I lost it. Hang on.
So
there it is.
Ryan, he knows a lot of high-level people, so he's talking to Vince Malta, obviously.
Yeah. Get Vince on the phone, right?
Yeah.
Let's talk to him. It does say that it's going to replace it.
It says it's going to
following through on that plan. The first notice.
No, sorry. Has decided to shift
regulations. No, it says replace regulation Z to replace the DTI limit with a price-based approach.
Right. And then up here decided to shift from, and then it literally says 2 sentences later, replaced.
Oh, I love this quote, Ryan. Thanks. This is a quote from Nancy Pelosi. "We'll know what's in the bill once we sign the bill."
Yeah.
We have to pass the bill so we can figure out what's in it. David says, "Hey, David, thanks for chiming in." He said, "My guess is the government will create a guaranteed down payment assistance program once the rates bottom out to keep the market going."
That'd be awesome. I have a lot of people reaching out about, down payment assistance. So, okay. Hey, Ray. There's a guy saying, "Hey, Ray."
Oh, yeah. Leighton Wood. Hey, buddy. How's it going on? It's been a while. Dan, you ready to take on the U.S. home prices?
I'm still not ready to move on from that, but yeah. But hey, you know what? I do have to be honest though. I feel, because when Ray and I were reading this before the show, we were like, wait, what? But I'm just being completely transparent here, but I feel much more aware, and Ryan's comments help, everyone's comments help, and actually reading this live, learning live was kind of fun. So I feel much more confident knowing that it's going to be replaced, but it's not. It's a shift.
It's a shift.
It's a pivot.
The overall picture.
Yeah. How do you? I love how Ryan said it's not going away. It's just going to get repackaged. He is so good. He's always like that in the contributors group too. It's good. It's good. It's good. U.S. home prices grew 5.5% in April, but there's more. I don't know. All right. U.S. home prices gained 5.5% in April from a year earlier, as low mortgage rates and a shortage of listings boosted competition for properties and kept values growing even amid the Rona pandemic. By the way, that's April. May was even crazier. So I expect this number to be up when we hit this story next month. The pace matched the annualized gain seen in April 2019, according to the report from the Federal Housing Finance Agency. Also had to say that a lot before the show. I couldn't say that. Federal Housing Finance Agency. The inventory of homes on the market in April fell to the lowest level ever recorded for the month, according to Lawrence Yoon, chief economist of the National Association of Realtors. A limited supply keeps prices high. A limited supply keeps prices high as buyers compete to get a deal. Now, this is a quote from the man himself. There's a major bottleneck in inventory and a tremendous amount of buyer interest, which is supporting price growth, Yoon said. So I've personally been posting a lot about this stuff and trying to jump all over sellers and saying, hey, and I've been getting a lot of messages, by the way, Ray. What kind of feedback are you getting? Almost saying like it's a bad thing that I'm saying sellers, you need to sell now. Like if you've been waiting for the top of the market, we're teetering at the top right now. And I'm not saying there's going to be a crash. I'm not some alarmist. I'm just not that way. But if you've been waiting and waiting and waiting, now is not the time to miss out. You know, this may go on for another through this summer and into next summer. It may happen. I don't think that's very sustainable, but it's almost like less inventory and then buyers that are still in the market. And then that frenzy thing is happening. They're hearing that it's happening. So they're being told that it's happening. And then they're like, I got to get into the market.
And there's still not enough. So Leighton, I'm going to get to your comment in just half a second, but there's still not enough inventory on the market. So we're pushing everyone that we can to list the home until we see that there's a real liftoff, I guess you could say, from people needing to purchase. One of the things that I have noticed is that it's still price sensitive in our area. You can't list something for $20,000 over list price and get it sold.
Absolutely.
It's still term sensitive. So if somebody makes an offer on a property, but the terms aren't correct, they're still willing to walk away and find something else.
Absolutely.
So it's not like a full on seller's market. It is favorable to sellers, but the sellers have to be smart about what they're doing. And I think some of the pushback you got, actually, we talked about this in one of the contributors groups or posts or something like that. But some of the pushback is whenever a realtor says listed this in one day, had 30 offers, sold 30,000 over, or something like that, then a lot of other realtors look at it and say, well, by posting that, you're kind of making it sound like anyone can do this. And the delicate part, or I guess the part to remind people in like an asterisk for those kind of posts are the reason why this worked is because the marketing plan behind it. The reason why this worked is because the pricing and the strategy to stage it and the strategy to get it ready and the professional, like a plumber can come into a house and in 2 seconds stop a leak because they know what button to push, right? That's why they get paid. They know exactly what to do. And it doesn't take them long to stop a leak. Where a homeowner could eventually stop the leak, but by the time they're finished, they could have ruined floors, they could have ruined cabinetry. So in that scenario, being the professional and knowing what button to push is super critical.
Well, and also to add to Ray's point, right now, certain realtors that were selling stuff before, but didn't do the full package of marketing.
Right.
Now that you have to be doing that full package of marketing, if you don't have a 3D tour and a walkthrough, the home's not getting seen, really. you know? So if you do that and you overprice it, you know, so yeah, there is a good caveat to that.
And then Leighton asked a question, and you're a little late. No, I'm just kidding.
I know he was supposed to post this 20 minutes ago.
We did talk about this a little bit earlier in the show. So if you're watching this later, go back a little bit and there's more detail. But in short, I'm telling people in Arkansas to go for multifamily. And I think this is appropriate for most places. There's less competition from owner occupants in multifamily. You are purchasing from an investor normally. So they're also running look at the issue. If you can find an investor that needs to let go of property, I would be seriously considering multifamily and as much as you can whenever you see a good deal. And a good deal, if you're buying in an area that has a lot of appreciation, then I'm finding a lot of investors using the 0.8 rule, where you multiply, it winds up being 10% a year, but you multiply the purchase price times 0.8. And if you can rent it for that amount or get that amount off of it in total rent, then they are willing to make the purchase. If not, then a lot of the investors are moving off. So that's kind of like the minimum that I'm seeing right now for a lot of the investors, the 0.8. When the market was really good and there was a lot less competition, people were trying to make, 12, 15, 18, 20% even off of properties like that. But we're just not seeing those returns anymore. And the appreciation is such in which if you're buying multifamily in a good area, the 0.8 return is going to be great because you also get the appreciation from the property.
Nice.
Melissa Mara Echo, she says super term sensitive right now.
Well, I'm price sensitive. There was most of the showings I've been doing on the buy side have been, and then on the listings too. But again, we price it right, we market right, we do all that stuff. So they're getting a lot of traction. But on the buy side, a lot of what we're seeing is tons and tons of showings, and you have to schedule their very tight time frames, and then they're inevitably going to get offers. Or on 2 different properties, I've sent an offer before we even see the house.
Yep.
But then I had one round of showings where literally we saw 8 properties in one day because this is a seller that got that crazy thing to happen and got a bunch of offers. And I had one day essentially to get them into escrow. We saw 8 properties. 6 or 7 of them were no offers, just sitting. And some had been on the market for 90 days. And 90 days is about how long this has been going on.
Interesting.
And these weren't beat up rough properties. They just weren't. It was very price sensitive. These were, and that's the only thing, just the price. The condition was there, but again, if you match the condition of the price, so you're going to get views on it. If
you have iPad photos, that's not going to work.
Oh yeah, but I can't do that either. I was told I can't do that either, which I did the other day.
David said, "Will sellers who took forbearance be able to sell?" I think so. It's
as long as they still have equity, right?
Right. They couldn't sell for less than that, so they would have to. It was probably like if there's a second lien on a house, like as part of the transaction, that forbearance gets paid off and everything's made whole.
Or if there's solar panels on the house, that's second loan, and you just pay it off with the equity in the home.
Right. I've had more issues with buyers who are accidentally put in forbearance trying to buy their other home. Accidentally clicked a button on a website.
Yeah, that's not funny, but that's funny. And this is a very good point he makes.
Yeah, he says the only thing that matters is the perception of the consumer at the time of selling or buying.
It's that statement is very, very inception. It's all, what are they perceiving? Do they perceive that you are doing high-end marketing, but you're not? But that's how they see it? I think it's very interesting.
So let me get to this other story. It's a pretty quick one. We've been talking, I guess, for the last month and a half about short-term rental markets. And if you recall from some of the previous stories, we were talking about how several homes or those homes on Airbnb and a couple of the other companies were being taken over by larger companies. Well, it looks like the bailout is already there. And it's not really a
fun graphic they did, Ray.
It's not really a bailout. They're just getting bailed out by the hot summer market. So after the long pandemic, Ryan Roenbeck, who I know actually, he talked about, he's a realtor, and they give some anecdotal stories in here. I just kind of want to get to the meat of this. So there's a good anecdote from him. Vacation properties come roaring back. He says, this is Sean Greer. He's the Vacasa's senior director of real estate. He said, quote, travel has come back with almost a vengeance for us. We are in a position where we are ramping up operations as fast as we can, Greer explained, adding that the company has hired back a majority of the people that it furloughed. So we were just talking about them furloughing like a month ago, and they're already hiring back. Data the company provided bears this out. Vicasa's booking window has fallen from a high point in April of 142 days prior to the stay to just 41 days in June. So you can read more on Inman.com. But basically, we wanted to share this as a short update. And it does say some markets are doing better than others, et cetera. But I basically just wanted to share a short update from our previous stories that say, hey, the vacation rental market looks like it's going to be okay. Because we do have a lot of real estate agents that own Airbnbs and stuff around the area.
Well, we have
too.
Tom Tezak, who lives in a primarily vacation area in Hawaii.
Christian Harris posted a link in our chat about a town hall with Freddie Mac. So feel free to check out that link. But he says you can ask him questions. It's about an hour away.
Well, he's a great solo artist too, Freddie Mac. His work with his band was good, but Freddie Mac solo is much better.
Yeah. His last album was his best album.
I agree. I like his new stuff, but it doesn't have the same flair as his old stuff, you know.
Only the old stuff had a couple of deep cuts, you know. But
yeah, that's not a thing anymore because now too many people know about him. We've taken a turn. Melissa is talking about, I think she's talking about Long Beach Island.
Our rentals are pretty much fully booked now.
Yeah.
Yep. And she was just talking like a month or 2 months ago how they were emptying out and it was, you know, everything was burning and dying.
Well, the season was delayed, I think is how she was saying it. It was delayed and now it's there. Because I think people are, you know, they can still social distance, but and even if you have to, you can bring your own sheets and bring your own food and you can still feel comfortable with doing a vacation like that.
I think we said this 3 weeks ago. I had a friend go down to Florida and it was like 3 or 4 lines deep on the beach.
Yeah. Oh yeah. Well, they opened up way too early.
Yeah. And people were giving all kinds of discounts in order to fill their rentals and they're not now. So if you got the cheap plane ticket and you got the cheap Airbnb, good on you. Cause that just went away.
Yeah. Well, and if you want to risk the Rona, but you get a great deal. So
Melissa Mara said, and people are still calling, asking if they can get a rental for all of July or all of August, and not a full months or not even an option. And most weeks are taken now. And that was one of the things that we talked about too, is how that a lot of the short-term rentals went to more longer term. And now they're not doing it. Linens aren't being provided in a lot of houses. Tenants have to go around. Yeah, there are some changes, towels and sheets and things like that they're not doing.
I don't take vacations, so I have no idea.
I saw one Airbnb that took out all their dishes and said that people have to use paper plates and forks and stuff and just throw your stuff away.
Yeah.
Yeah.
I like it.
Well, speaking of changes due to COVID and the corona, NAR, their gigantic expo that they have every year, what are they going to do with it, Dan?
So amidst health safety concerns, NAR's 2020 Realtors Conference and Expo goes virtual.
Dun, dun, dun.
Dun, dun, dun. So they had their, I don't know, this is, okay. I have a lot of questions about this, but the NAR announced Wednesday that the 2020 Realtors Conference and Expo or EBSCO, whatever, previously scheduled from November 13th to 16th in Narlands. So here's my first question. Are realtors going there to get value, or are they going there because it's in New Orleans and realtors like to party? That's my first question.
This is one that I wanted to go to because it's close to me. Normally it's on East Coast, West Coast.
Okay, but let's say money, flying, all that wasn't a factor. Would you always go, or are you going because it's in New Orleans and you can also party?
Both. It's close and it was in New Orleans, and that's a fun place. Beignets. Oh my gosh.
Okay. So anyway, it's going to be transitioned to a fully virtual format in light of ongoing health and safety concerns stemming from the Rona pandemic. NAR completed its first ever virtual iteration of its legislative meetings from May 12th to 14th where 28,000. So here's like the part of me is going, well, I don't know if people are going to want to see this online, but this where 28,000 participants nearly tripled the annual conference's average attendance to legislative meetings. That's kind of cool. And then in other news, EXP agents have been prepared for this for a while.
Are we going to get little Second Life avatars or Sim City avatars to kind of?
Yeah. EXP agents are like, finally, thank you. So here's a quote from
David says the reason why he's going to go is to party and see the new logo.
There you go. Yeah.
Nice.
Yeah. See, there you go. Party. I mean, network. If you haven't seen my post, it was probably a year ago now, but about realtors in regular daily life and then realtors at conferences. It's a good one. But you're going to have to follow me down below here at D-Lettered Rocks to see that.
I had a good time at the Tom Ferry Summit. That was fun.
Oh, I have things I cannot talk about. So anyway, this is a quote from the man we talked about earlier, Vince Malta. Uncertainty has in many ways defined 2020. While positive indicators begin to show our economy is rebounding and treatment options for the Rona, sorry, I'm not calling it that, it's the Rona, are proving more effective, so much remains unknown about this virus and the circumstances we will face as a nation come this fall. He's making a very big statement, what he could have said in 5 words. But in order to prioritize the health and safety of our members, staff, and sponsors, NAR looks forward to hosting a fully virtual sponsored by EXP Realtors Conference at Expo. Get it? This November. Now with the legislative meetings is what I wanted to ask. Getting record attendance, quote unquote. Do you think this will get more realtors to join and by proxy get them to care? Will this be a gateway drug, so to speak? Where did Ray go? Did I lose Ray?
Are you asking? I thought you were still kind of being rhetorical. So
no, I'm asking. So is this because I'm like, dude, I lost Ray. It's just me now.
It's not really sponsored by EXP, but that would be funny if they did.
No, that was me being funny. No, but I'm just not interested. I love to read articles about what NAR is doing and anything that affects us as real estate agents. There's a big, crazy, very important conversation going on in our Be More Contributors group about the coming soon rules that was changed, that has mostly changed things for the worse, especially in Houston where Clayton has to deal with it. But is this going to gain more interest? Like, I don't have to go fly anywhere. Now I don't get to party and stuff. I don't get to quote unquote network with people, but I can just hop online and watch the sessions that I want.
David said, I hear Freddie Mac is headlining.
They are. Or he is, yeah. He's going to kill it. So what do you think on that?
I've never been that interested in the politics of real estate.
Right.
Never been interested in the legislative meetings, especially. And any meetings that involve Robert's rules, I usually go just to use the Robert's rules to disrupt the process. So
by the way, you guys know what Robert's rules are, right?
You got to look it up. It's fun for meetings. So I'm not a huge fan of those type of conferences. I'm not a conference guy, period. I do very, very, very few conferences and don't really enjoy conferences, except I went to a Tom Ferry conference and I really enjoyed that one. That one was good. I got a lot of good information and it was worth me going to that conference.
Well, then part of the difficulty is that Ray and I get swarmed when we go to these things. So it's...
Oh, yeah. I mean, the crowd management alone is,
it's a lot. So anyway,
my bodyguard out there. So I enjoy those conferences. Clayton Fernando Shrim says, training my new assistant, and I swear I heard my name.
You did.
You're listening in the background. It's great. So I might check it out. But at the same time, I don't want to sit on a Zoom and wait for something. I would much rather them be like edited and pre-recorded and have the materials and the slides and all that kind of stuff for whatever they're going to do. And I would take that in and watch that, like the Apple keynote. right? The Apple keynote has been live for years, but it's so polished and so managed that you watch it and it doesn't feel live. Well, they just did an Apple keynote, 2 days ago? It was either Monday or Tuesday. They did an Apple keynote, and because they're always so polished on their keynotes and presentations, it felt kind of the same, even though it was very much pre-recorded. I think most of it was pre-recorded. I don't think
there just weren't people there, but it's just it's already the same.
Because the corona but their presentation was the same as what they normally do because they're so polished and everything. You didn't hear the crowd cheer when they said things like adding widgets to the home screen. Mike Elizabeth Rodell echoes what you said. She said, "You are so famous, it's obnoxious." Yes, yeah.
I have a funny story, but I'll get to that when Ray's done.
So, I'm one of the big benefits that realtors get out of going to these conferences is the ability to network with other realtors, the ability to connect with other agents. And then that makes it worth it because there's a chance you can get a referral from those other agents that you network with who know you. And I think that's one of the biggest benefits as agents that we receive. The other benefit is a controlled environment in which you're sitting there with no distractions, no office that's under construction, and you're in a very controlled space that allows you to focus on just that. Especially if you have somebody back home helping you manage your real estate business, you can really just take time out and focus and kind of give yourself a retreat and focus on the information at hand. With it being very digital and it's Zoom or streaming based, and there may be interruptions, and I don't see that it has anywhere close to the same impact as a regular conference would. I would rather have pre-recorded information with the slides and all the, like, give me a book and let's go through it, than a live webinar.
Yeah. Well, it's also different when, you go to a Tom Ferry conference, that dude comes out and he's electric. He's playing AC/DC and you're just pumped up. He makes you do the, and you all dance together and you're like, you feel the energy out of 5,000 to 7,000 people. And it's crazy. It absolutely is. And you're also there for a very specific reason, to learn. And then you also, the bonus is you get to meet people. Like, literally, that's the first time I ever met Ray in real life was a year and a half after we had been doing the show together.
After we'd been together for a year and a half,
we had finally met. And then I met Clayton, I've met Harold, I've met so many people, that we already network on Facebook, but we meet them in real life. Michelle Calkins, that's where I met her. And now I'm lucky to have an awesome agent that's up on the hill, because that's a different market. I'm not going to go up there, but I can send it to her, and then literally texting me right now, sending me something. So it's a good bonus of that, or it's a good benefit of that. No, I just let you inside. The dog just came in. Now she wants to go out. No, no, it's not happening. But to try to get to your point, Ray, is you're in that environment. Even when you go to your hotel and you're still on your way to the next thing, or you're hanging out with a bunch of realtors going to to dinner, it's still a all encompassing, all learning environment. And you become, what is it? You're like immersed in it, or submerged. And it's just, it really long distance. Yeah, they do.
Relationships do work. eHarmony worked for y'all.
Well, they work here. Yeah. This is Beard Harmony.
We could do that. Beard Harmony. We should totally create that.
There you go. Another idea on the Beard Man Real Estate Show. But I think, to go to your point, is you're going to be watching this thing just kind of like getting up, making a sandwich, flipping on Netflix. So they might have more views and more quote unquote attendance, but who's really getting anything out of that?
Yep. I concur. We'll see how it goes. Tom Ferry has also switched his to streaming this year, so we plan on attending digitally, but we won't be there in person, unfortunately. So we're going to miss a lot of that networking, but maybe we can do some kind of get together or something. I don't know. We'll try to figure that out.
Ooh, gosh.
Dan, that's all we got.
Yeah, it is all we got. I want to tell a quick story about being famous. I was recognized the other day from the show. I was out showing properties, and as I'm walking up to go to the lockbox to get the key, I hear Dan Ludwig. Is that you? I'm all, And it was just another realtor who's a lurker that, you know, and by the way, we say lurker, we're messing with you. We don't mean it's a bad thing. We just want you to comment and say you're here. We want you to interact. That's what we really want. So when we say lurker, we're half messing you, but it's because of love. Yeah. And he was like, oh, hey, I watched the show. And, you know, it was a really awesome moment. And then, you know, we were competing realtors. So he just showed the home that my clients are going to fall in love with. I'm like, okay, no. But it was just cool. And luckily I had my bodyguard there with me for that one guy that happened that one time. But I don't, it's just interesting. And it was kind of fun. But yeah, we do get swamped at big conferences though. It's pretty crazy.
Yeah. So if we don't get to you, we do try to make special effort to meet everyone that's wearing a t-shirt. And speaking of the t-shirts, you should really wear one.
You should, yeah. If you love Ray and I and you respect us, right, you should order a shirt.
That's right. I'm going to post it again. Order your shirt. There you go. I posted it again in the comments. If you want one of these Listen, Learn, Love shirts. So good. We're going to give away the money. It doesn't go to support our podcast or anything that we're doing here. It just goes to support those that have been disenfranchised. And hopefully we'll find, I think there's a couple of good communities or good programs that help out local people in the Black community. So that's what we're after there. So listen, learn, and love. I think the message is more apropos than ever. So be sure to order one of those t-shirts. And Melissa Mara says she wore her Be More shirt to bed. So thanks.
They're so comfy.
They are super soft. It's going to be like these that were on a previous order. They're super soft. I do have a couple left over of these, and I will post. So be watching for that. I'll post the sizes, and it'll just be first come, first serve on the sizes of these if you want. We just have a couple that are left.
I think I have a few left as well. I could do the same thing. But since Ray and I are so so difficult to get to in real life, you can follow me at DLudwigRocks, DLUDWIGROCKS. And then that way you can feel like you have access to me, but you don't have to get beaten up by my bodyguards.
His assistant will answer your DM.
Yes.
You can follow me at Ray Zorback. That's RAYZORBACK, wherever Ray Zorbacks are sold.
I like that. You know, you control the narrative sometimes, right? If we talk about how famous we are, it's just going to come true. Like we're going to talk about realtors like that decision to get rid of DTI. We do. We like it.
You mean like if we were to talk about how many copies of our book was downloaded?
Yeah. Oh, that's. And then, you know, we're going to leave this show on a cliffhanger. So that is some of the best content in the weirdest way that I've ever seen.
I'll just say that Dan and I are fascinated by a particular guru that we are following that has like zero real life experience. I mean, his book is terrible, but we're fascinated by the faux person that he's created online. Yeah, and continues to pump out content on it, and it is amazing for us. So we're having a good time with that.
At least once or twice a week, we're sending things back and forth. Like, did you see this? And
check out that. It's just amazing. People are believing it. That's the wild part is that people are like,
they are. And when you go do a tiny bit of research and go to Amazon and search the book and read the reviews, there's reviews by President Obama, Christopher Walken.
When Mel Gibson, when he a reviewer in there?
Who? Yeah, Mel Gibson was a reviewer. Like, not even trying to hide it.
But then there's a couple of verified purchases who destroy the book, and it's hilarious.
But they're buried because of all these quote unquote high profile. It's insane.
Be sure to give Real Estate Facebook page a review because we need to build up our faux personas. That's
what we're doing. We just want to be as fake as we can for you guys, but we love you. We got to go.
Bye.
Bye.
Order shirts.